Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. An indecisive spinning top on Friday, but one that could also be seen as a bearish harami. It was nevertheless the third consecutive close over the declining long moving average, currently at 103.73. Though the tail of Friday's action did penetrate below the long moving average, but not through the support of the well highlighted congestion between 103.38 to 103.69. So we have these two now, the long moving average and the congestion interacting with each other, whilst in the slightly bigger picture the market is moving in between the support of the upper trend line, currently 102.18, of the September to date ascending wedge pattern, and the overhead resistance of the seemingly influential broken but seemingly still influential upper time of the broken, which is currently at 104.67, the broken January to May 2021 bearish Andrews pitchfall. This all highlighted once again the two recent core patterns seen here. We have a September to date ascending triangle and a September to date ascending wedge pattern. That's currently the wedge patterns at 98.20 to 102.18. Now I've highlighted the ascending wedge pattern in blue to show you a clear idea of what I'm talking about. We've seen a clear break above the upper trend line, the ascending wedge pattern. This left us with some topside opportunities. We have already seen the market reach and exceed the primary and secondary targets for the ascending triangle, so these have been retired. We still have live the possible targets for the ascending wedge pattern, for primary target X2 in the 105.35 area and a secondary harder to reach target X3 in the 107.65 area. However, the upper time is capping the action with the long moving average and the congestion sitting in the middle of it. This cannot go on much longer, as the upper trend line and the time meet at an apex by late December, so watch out. Well, so far today, a lower open and a dip below the long moving average right into the congestion, reaching the base of it in the 103.38 zone before pulling back up. The pullback up is perhaps the most interesting of today's action, as it sets the stage for a possible key reversal up. If we close either over 104.08 or under 103.95, then we'd be on. Right now, we are looking very much at a possible key reversal up with an additional bullish engulfing pattern as well. However, beyond that, we have a move up over the upper time for the first time since February and the highest high since June. We're now testing the February and March 2017 low at 104.92, which is just a little under target X2 at 105.35. Cable, aka sterling against the US dollar. An indecisive spinning top on Friday, but an interesting one. It was the second consecutive close over the May 2020 low at 120.73, though it was still capped by the declining long moving average, currently at 121.61, and the congestion and early May low at 121.54. Nevertheless, the market has reached up to target X at 120.20, the primary target for the late September to late November ascending triangle. As I have repeated here often, much as in euro dollar, there are two core patterns here. I have highlighted the relevant trend lines in blue to help visualize what is going on. We have a late September to late November ascending triangle, which has run its course, and also a September to date ascending wedge pattern, currently 115.51 to 118.64. Both patterns have been previously compromised and both have repaired themselves. Late 3 weeks ago, there was a break higher over the flat trend line of the ascending triangle, giving us the achieved primary target X in the 120.20 area, and a secondary hard to reach target X1 in the 122.5 area. More recently, we've had consecutive closes above the upper trend line of the ascending wedge pattern, leading to a primary target X2 for this pattern in the 124.20 area, and a secondary harder to reach target X3 in the 128 even area. Of the remaining targets above, we now have to wait and see what the market will do when it really meets the declining long moving average, currently at 121.61. Now, so far today, a lower open right on the 120.73 May 2020 low and a dip below, but one that has since recovered and is sitting in between the support below and the long moving average above. Now, we might even try for a key reversal today as well, so watch out. Euro sterling. A bullish harami on Friday, if only just, However, this was not before the two previous sessions managed to reach down and reach target X at 86.02, the primary target of the recently highlighted roof pattern constructed during November and picked out in blue on my daily chart. On their way lower, prices punched down and closed below the slowly rising medium moving average, currently 86.20, but ultimately balked at testing the long moving average further down. That's currently at 85.35. Thus, this has left us with the secondary harder to reach, much harder to reach, if I'm honest, target X1 in the 85.45 zone for the rooftop pattern. Interestingly, I have decided to keep for the moment the broken since repaired and now broken again lower time, currently at 87.28 of the April to August bullish Andrews pitchfork. I'm going to keep a close eye on this lower time. I'd also like to point out there is no finessing of this bullish Andrews pitchfork into a shallower bullish shift pitchfork. This is not possible here. Once it's finally done, it will be wholly retired. Now, so far today, a follow-on higher to Friday's action, back up over the medium moving average and just pushing up over the April 2020 low overhead at 86.69. US dollar against the Indian rupee. A second indecisive daily pattern on Friday, this time an indecisive spinning top after the previous session's indecisive doji cross. The base of the action, on an open and closing basis, still seems to be more or less the lesser Fibonacci line at 81.63, with the rising short medium moving average pushing up from below, currently 81.64, though the tail dropped some distance below before pulling up at the close. The recent topside has been capped by the same recent congestion at 81.94, though this wasn't tested the last few days. Beyond that, the next congestion is in a small band, 82.15 to 82.26. I'd now like to discuss the larger scenario, one which I've often mentioned in my earlier commentaries. So, I'd highlighted the September to early November ascending, expanding wedge pattern. You can see that in blue, highlighted in blue on my daily chart. In early November, prices pushed down through the lower trend line and carried on down until 2 weeks ago. This process confirmed the pattern and gave a primary target in the 18.90 zone and a secondary harder to reach target X1 in the 80.28 zone. In mid-November, the market reached the primary target, but we've since seen the market bounce up from the rising medium moving average below, and that's currently at 80.72, such that I am now wondering if perhaps, just perhaps, reaching the primary target may have been enough. This requires a little more contemplation on my part, some further data over the next few sessions. In the meantime, we have a fresh September to mid-November bullish Andrews pitchfork. The market is at the moment not far from the lower time, currently at 81.36. So far today, well, an interesting piece of action. A higher open still capped by the congestion at 81.94, but a move down below the lesser Fibonacci line at 81.63. And also the short medium moving average currently 81.64, though not as far as the lower time, but enough to look right now like a possible bearish engulfing pattern. US dollar against the Brazilian real. An immediate countering bullish engulfing pattern, if only just on Friday, but with a close back up and clear of the broken upper time, currently at 5.35.33 of the July to late August bearish shift pitchfork, as well as the lesser Fibonacci line at 5.38.13 that acted as a cap in October. Now this prompts the question, is the action over November possibly a bullish halfway hesitation, or maybe even a bull flag type action, or are we just topping out once again? Below, we still have the 50% Fibonacci line, the May 2020 to April 2022 move at 527.37. I continue to say this does not look that good a support, though the other slightly lower 50% Fibonacci line at 522.76 of the March 2021 to April 2022 move does look a better support. I suspect the strength of the latter may be due to the conglomeration of moving averages nearby, specifically short moving average currently at 528.38, short medium moving average currently 526.37, and the medium moving average currently 524.59. Two additional points to remember. Firstly, we are set to make a monthly key reversal up for November. Well, monthly key reversal for November at the moment, let's say. Thus, if we close on the 30th of November, either over 541.54 or under 517.91, then we'll be on. Right now we're looking at the lesser cousin to the monthly key reversal, an outside month, though close to a monthly key reversal up it is at the moment. Secondly, we had a golden cross mid-November, if only just, of the short medium moving average up over the medium moving average. I was not that impressed by this one, but it seems to have spurred a bullish incentive on the back of it, despite my personal doubts. US dollar against the Mexican peso. A seemingly decisive combined key reversal down and bearish engulfing pattern on Friday, if only just on the latter, coming as it did after the previous session's indecisive spinning top. The previously highlighted overhead cap of the declining short moving average, currently 1942.54, and the upper time, currently 1946.55, of the broken but still influential March and July bearish Andrews Fishel, have all contributed to the bearish pressure and the failure on Friday to close over the May low at 1940.70, despite piercing it, and as they all added up to the move lower. Overall, the recent moves lower all relate to the previously highlighted crossover combination of the late October in late October of the broken upper time of the March to July bearish Andrews pitchfork and the middle time, currently 1971.84, of the still intact bearish shift pitchfork for the same move. Question now is, what's next? As the significant November low at 1923.21 is nearby, and the March 2020 low below that at 1915.03. So far today, a cautious lower start that recognises the space above up to the main low and the broken upper time, as well as last Friday's low at 1929.60. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. Here comes the final bit.